Right, well, hello, ladies and gentlemen. Welcome to FNA's Suptech Broadcast. I'm Anthony. I look after marketing and comms here at FNA. And whilst we wait for others to join, I'll just cover some very quick housekeeping, and then I'll hand you over to our guests to begin the discussion. So this broadcast follows a 60-minute format. Roughly 45 minutes of that will be spent talking to our guests, and then we'll have a Q&A, roughly 15 minutes at the end of the session. If you'd like to ask a question, if you think of one whilst the guests are talking, please do ask using the Q&A widget at the bottom of the screen. Please don't use the chat functionality because the questions tend to get lost in and amongst everything else. So if you'd like to ask a question, use the Q&A widget, and at the end of the session, our guests will answer as many of them as we can. So for those of you who are perhaps aren't as familiar with FNA, FNA is an advanced analytics and simulation technology company. We work across 4 core sectors, those being central banks, commercial banks, FMIs, payment systems, and national security as well. So our software is solution-based, should I say. So where a central bank might use our technology for RTGS stress testing purposes, a commercial bank will use the same underlying tech to optimize their liquidity in real time. Next slide, please. So we're very active as a company in the Suptech space. This slide here just very briefly explains our core collaboration areas with central banks and financial authorities. Loan data analytics on the left there, which is a solution we deployed earlier in the year across Project Ellipse with the BIS. RTGS stress testing in the middle, a solution very much hot topic right now with clients, which allows central banks to understand both operational and financial stability implications of stresses across their payment ecosystem. And then lastly, there on the right, we also cover a range of monitoring solutions as well, including liquidity, AML, and also market conduct monitoring as well. So on to our discussion. I'm going to hand you over to Thomas Nilsson, who works here at FNA as Director of Central Bank Solutions. Thomas will introduce our speakers, and then we'll get the discussion kicked off. So Thomas, thank you. Over to you.
Thank you, Anthony, for the introduction, and good day, everyone, and welcome to this late May Suptech broadcast. Today's discussion is on regulatory innovation and adoption. We will focus on the challenges, initiatives, and best practices in achieving efficient data flow and promoting data consistency across financial institutions. Our speakers will discuss the benefits of regulatory innovation for both regulators and financial institutions. They will highlight the importance of balancing innovation with the stability and resilience of the financial system, while also ensuring consistency with relevant regulatory frameworks. Through this discussion, we hope to shed light on the role of regulatory innovation in promoting a more efficient as well as resilient financial system, which is a crucial underpinning for supporting economic growth and stability. So I'm honored to introduce our panelists and invite them to share their perspectives on this important topic. We have Carmen Barandela from the Bank of England, the Prudential Regulatory Authority, also known as the PRA. And we have Johannes Turner from the Austrian National Bank. So let me kick this off by asking you a first question. So let me start with you, Carmen. Could you tell us about your background and your current Suptech work?
Yeah, sure. Thank you. Thank you for the introduction, and good day all. So my background is mainly in data and software engineering. What it feels like a long time ago, I did a master's degree in computer science, and I quickly flipped into programming and the relevance of data. I started my career working on nucleus physics research, and that was my first contact with huge data sets. So huge amount of data were analyzed to actually find the Higgs boson that happened in July 2012 after a lot of years of research. After my initial stint in nuclear physics research, I moved to the finance world. And when I relocated to the UK in 2016, I joined the Bank of England. And since then, I've been working mainly in different data programs, big data programs to consolidate different data sets we collect. And now, more recently, as you said, I'm working in the PRA in the strategy and operational team for RegTech.
Thanks so much, Carmen. So I'm going to ask you the same question, Johannes. Could you tell us about your background and your work in Suptech?
Yes, yeah, thank you, Thomas. Thank you for first introduction. I joined the Austrian Central Bank. It's now 30 years ago. And I have a PhD in statistics. And when I was a student at the University of Vienna, I never thought about or expected to really have something to do with statistics at the end of the day. And first of all, I joined the Market Research Institute. I worked there for more than 7 years. And as I mentioned, 30 years ago, I joined the Austrian Central Bank, the National Bank. And first of all, the first 18 years, I was a supervisor. And a supervisor on and off-site supervision, and knowing in very much detail how processes within banks go on, and how especially that was always my favorite topic, how to handle data. And when I got the possibility to change to statistics, I was appointed to Director Statistics, Statistics Department. It's now 13 years ago. And I had the possibility then to change the whole approach of the statistical data flows behind. And what we did in many years project is the strategy of integration of content, of processes, and of techniques. And the big advantage we had is that we had a window of opportunity more than 10 years ago, because our mainframe IT approach were changed completely. And what we did there is we said not to copy an old version of approach to a new agent, but to change everything what we thought that could make sense. And it was first of all the change of processes I mentioned. We found it more or less with the banks, with the industry, joint structures to discuss with them on arm's length and on eye level, same level. We integrated the content. We defined a big data model, so-called cube-based data model with more granularity, and we changed the IT system. And we now have a system, I think, one system for all collection possibilities, for all necessities, for all regulation we have in Austria in different areas for financial statistics, not only for banks, also financial statistics on companies. And so I think we have a very nice system. We are very proud of it, and show this strategy and process. And at the latest news is that the ECB even last week decided to go the same way with the IRF integration program, to go the same way we did already many years ago, to integrate the content and to redefine collaboration within the system.
Thank you, Johannes. I'm curious to learn more about your system. So let me put the question to Carmen again. What is your current Suptech work at the Bank of England?
Yeah, thank you, Thomas, and thank you for coming back to this point. You mentioned before the PRA, so that's the Prudential Regulatory Authority. So this is part of the Bank of England, and we're responsible for the prudential regulation and supervision of around 1,500 banks, building societies, credit unions, insurers, and major investment firms. So within the PRA, I'm actually leading the implementation and delivery of our RegTech and data strategy. So since 2021, the PRA focus has been to drive value for supervision, was making the most of data and technology, and helping to modernize the bank's ways of working. So similar to what Johannes is talking about, integrating the collection and establishing data. Well, I'm a bit worried about the word data lake, but the data structure where our data is consolidated. Our ambition is to deliver a step change in the PRA's efficiency, effectiveness, and data culture. And we have set up a target time or target state of 2026. So our strategy is to drive value by that date. We have used as a placeholder because, as you all know, if not, value can dilute over the time. So we have built a strategy around what can be achieved by then and obviously after them, but that will be our first step change. And we think we can achieve that through a phased investment in tools, in technology, in processes, but also in skills or how we are introducing these new ways of working. Particularly in the tools space, we're on track to deploy a number of new supervisory tools that we're hoping to help supervisors on the day-to-day. So our focus is around structuring and structured data. And actually, we're doing some interesting work around test analytics. So we just want to make the best use of technology and processes and data to make supervisory activities better and more efficient. So basically, that's the core of the functionality we're driving now, our Suptech 2026 strategy.
It seems like you're covering quite a few aspects of Suptech and RegTech there. So let me put the next question to you, Johannes. What do you think? What do you see as some of the key overlaps between RegTech, regulatory technology that helps banks with their regulatory compliance, and then Suptech, supervisory technology on the side of supervisors that helps them collect and analyze the regulatory data?
Yeah, maybe we can share my first slide I prepared already. As I mentioned already, our data model we defined jointly with the banks, and in the first row, more or less in the upper area of the slide, you see more or less the traditional approach, whereas in the below a part of the slide, you see the new, our integrated approach. And coming back to your question of this overlap, we think that our data model is exactly on an interface between RegTech and Suptech, because it's on the one hand, it helps the banks, the reporting agencies to fulfill regulatory requirements in an easier way, in a cheaper way, in a better way. And on the other hand, it helps supervisors and statisticians in the central bank to get high quality and more consistent data. And coming back to the traditional approach, you can see that the basis of all the information is in the core banking systems. And the problem we had during decades of years is that we manage data quality only on the output, on the right side of these statistical data flows. So the core systems fill in different data warehouses or different separated data areas, and have separated processes for statistical, for supervisory, for internal reporting in a bank, and so on. And that's what we changed more than 10 years ago, is now to motivate the banks to create a kind of input layer within the banks. They use also for their internal reporting, because only if the banks use the data for themselves, then the quality is a quite different one than if they only use it for supervisors. And based on this input layer, based on this very granular, redundancy-free data cube, we call it a basic cube, there are different reporting requirements are derived. So on the one hand, we have in the statistical reporting, from the ECB reporting, we are very flexible in collect the data. We also, again, take a kind of granular cube collection and then derive as a secondary statistics all the reporting requirements to the ECB, also to the IMF and so on. And on the other hand, for the EBA, for the supervisors, we have this maximum harmonization in Europe, so we are not allowed to collect it in a different way. But what we did is to define it a data model based on this input layer. So there's a clear borderline between the left-hand side, that's up to the banks, and the right-hand side, that's up to the regulators and to the central bank. And we did it together. And as you can see, it's exactly a RegTech and a Suptech tool. And the big advantage we have as statisticians, and we have in Austria, I don't know, for more than 20 years or 25 years, that all statistics is in one hand, is in one department. And therefore, in many other central banks, you have the supervisory reporting in other departments, or statistical reporting, or at central credit register in a third department, and so on. In Austrian Central Bank, all statistics is in one hand, and therefore, we saw the different quality, the inconsistency between the different reporting forms. And that was the reason why we say we have to change something. And nowadays we are very happy with this system, because all new reports, all new requirements, to implement them is much easier for all participants, for all stakeholders within this process. And at the end of the day, the quality is a much higher one, because quality is a question of managing the process and not only managing the output side of these data flows.
Thank you, Johannes. That's very comprehensive. So, Carmen, let me ask you sort of a similar question. What do you see as some of the key overlaps of Suptech and RegTech, and also which initiatives more specifically have the Bank of England done in this space?
Yeah, I think I completely agree with everything Johannes has said, and actually I'm glad to see we're actually following a not dissimilar approach. Well, similar to what Johannes was saying, I think for me, Suptech and RegTech are both sides of the same coin. I cannot see one without the other. And the clear overlap is data, and how that data is prepared and then consumed, and how that data is useful. So in terms of the initiatives we have taken, and actually it goes a bit on the line of what Johannes was just talking about. We have worked for a few years now into key priorities, which data we do collect and how do we collect data. Because obviously the backbone of the information the PRA needs to meet its objectives, as Johannes was touching on now, is a well-designed, predictable and timely regulatory reporting data that we receive obviously confidentially for the bank and insurers. But we also receive a lot of information that we call management information that provide the context where this reporting data is being prepared. Obviously, if we have really strong and timely regulatory data, probably will be less structural reliant on MI in the future. But we also require to think about data in terms of a crisis when the unexpected happens. So we call that ad hoc collections. So we are actually driving a program of work that will explore how the data we collect makes supervision more efficient. So to that diagram, I really like what Johannes is trying to understand that data model of and that handshake between regulators and the industry, just to make it efficient and not collect data for the sake of it, and actually making sure the data we collect is effective down the data life cycle and useful. So the data that we collect is very relevant, but how do we collect data is also important for us. So we set out in February 21 a transformation plan to enable us to get the data we need to fulfill our mission, and hopefully at the lowest possible cost to the industry and to ourselves. So we're focusing on integrating reporting, modernizing the reporting instruction, and trying to drive common data standards. We are benefiting, similar to Johannes was saying, from a lot of structured and valuable engagement with the industry around this, including individual use cases. And we shape the work via senior stakeholder groups and even with the bank executives involved. So there's a lot of collaboration to drive the two pieces of work. But similar to what Johannes was saying, the main initiative we have taken is around data, and which data we do collect and how do we collect it.
Oh, thanks, Carmen. So more generally, Johannes, what do you think central bankers and supervisors can do to ensure that Suptech and RegTech innovation is coordinated and that you follow the same data models?
Yeah, it's not easy to launch such a project as I showed already, because supervisors are always the watchdogs. So supervisors are not the partners of a bank. We as a statistician, we have it much easier role, and to implement such a data model jointly with banks, and also the banks together, because you have to keep in mind they are competitors, and they sit together on a table with the central bank and try to define a common data model, not by law, not forced by law, it's by a letter of intent. It's because all of them are convinced that it's better for them, better on the cost side, better on the quality side. So it's always easier to bring the statisticians in front and to let the supervisors do their work and to let the statisticians do their work. And I know that's always the discussion in many central banks, where the supervisors want to collect the data by themselves. And I think that's a big paradigm change starting already within the central banks. And then it's possible to gain all these advantages at the end of the day, because each of us has his specific role. It's clear that if we define our data model, the last word always has the regulator, has the central bank. But we have a lot of cooperation and a very transparent communication with the banks, and the so-called standing committee where we met all month in different fora to decide how to develop, how to bring this data model further on. And I think that could be again a role model for many different topics where banks and supervisors can work together. But again, it's easier for the statistician to do that than for the supervisors.
There might also be a tendency for banks to look at a statistician as more of a neutral counterparty than a supervisor, I could imagine. So let me put a similar question to you, Carmen. So which challenges do financial institutions and regulatory bodies on the one side face in achieving this efficient data flow with banks on the other side?
Yeah, and I think this is a very interesting question. And I think that goes back to part of the work we're currently doing. And actually, it goes back to that data question, because many of the regulatory returns we receive from banks and insurers are focusing on checking compliance with the PRA rules. And that's just because how the regulatory returns were designed. But the gap here is like, it's not necessarily how the same information that supervisors need to ask the right questions of banks at the right time or to inform policy making. So in general terms, there is this gap between what is truly useful for the PRA day-to-day business and what is contained in the regulatory returns. And that gap has led to fragmentation in the universe of data we ask for firms. Obviously, we collect much more data in different forms and across different channels. So in time, the data we collect will need to be better adapted to satisfy the primary uses we have for it, and lead us to eliminate an information that does not support the needs that we identify. So I think, yes, for us, one of the challenges is identifying that information that is useful, because all of the challenges we see downstream, about consolidating the data state, management, understanding a single source of truth, we strongly believe that comes from this data fragmentation from the beginning. So it goes back why we're investing about what data do we collect. So that for us at this point is the main challenge.
Let me turn that back to you, Johannes. Have you also experienced these challenges with data fragmentation as you've developed your model in Austria?
Yeah, the point is that, as I showed in my slide, that the data landscape within banks is extremely fragmented. I know that there's this BCP 239 and so on. Banks, especially the bigger banks, have to be motivated to integrate their data themselves for their risk management and the accounting and so on. But what we learned when we implemented our data model, that several banks have to be reorganized internally because they had this organization structure that didn't fit to an integrated data model. And therefore, I think it's now looking back, it was very helpful for them to be again motivated and not forced to think about this new way of how to organize their data and how to organize then their bank. And because always structure follows strategy and not vice versa. And therefore, we also in our central bank, in the Austrian Central Bank, we did a big reorganization in the beginning because when we started, or when I came to statistics, we have a vertical organization so that each division collects within statistics their data. So for instance, balance of payment collected their data, supervisory collected their data, and the statistics department for monetary statistics collected the data. And we skipped to a horizontal organization that at the end of the day, only one division collects all the data. And that was a precondition for an integrated approach. Not only the data model, but also the organization structure has to fit to the strategy. And I think that was very helpful and the learning process, not only within the central bank, but also within several banks. Yeah.
No, thanks, Johannes. That's insightful. I was wondering, Carmen, have you pursued a similar strategy in terms of horizontal integration, or going from vertical to horizontal? at the Bank of England? And what other challenges have you faced in adopting new technologies and approaches?
Yeah, I think it's a really good point that Johannes and you're raising here. I think more than organically, I think it was more around the governance, how data projects were delivered a bit more in silos. They were used as a traditional kind of a waterfall approach. Like I gather my requirements, I develop my data model, I do my reporting on my cube on top, and I move to the next. That slightly do the same, but in a very different way. So I think what the bank has done, and I think has been very efficient, is about developing a data strategy, data and analytics strategy, and that could be the horizontal silo across the organization. So we haven't had a major reorganization process, as Johannes was mentioning, but I think we have reorganized the way we work and the way we deliver data outcomes. So in that sense, yes, we have moved to a more a centralized data strategy that is trying to drive best approach for data management, what are the most consolidated tools to use around the organization for data visualization, different approaches for a consolidated storage or data layer. We haven't gone as far as having a model like Johannes has described, but I really like that idea, to be honest. So I will ping you on that, because I think we're floating with different models for different purposes, but I actually see the benefits of what you just stated. So I think we have reorganized the way we work more than the way we actually organically are structured, if that answers the question.
Yeah, definitely. So I mean, maybe Johannes, back to you. So you shared the horizontal setup and the fact that all data is collected in one place. Do you have other sort of best practices that you think regulatory bodies can adopt to ensure this form of data consistency?
Yeah, maybe our recent work now, as I mentioned already, the last more than 10 years now, we had this tragedy of integration on the input side of the central bank now. And what we thought some 2-3 years ago was now we have to help the users, our customers, our data users, and especially the supervisors are our users, to help them to gain these advantages of this data model. And the problem is that this data model is a very complex one. And it's not easy in a daily work, in a daily business to get to analyze the data you need. So we try to shift our strategy from this already done input side more to the output side. And maybe we can show my second slide I have prepared, that we try as statisticians to prepare the data that supervisors can use them. And normally, and you see it on the basis, we use therefore an Oracle analytical server, and it's really helpful with different dashboards and so on, and also for self-service activities. The supervisors can do a lot if we prepare the data in the background, because you have now multidimensional cubes, and it's really hard for users outside statistics to get rid of the white data. What we then, in addition to that, have, we called it Mars. Don't please ask me what these letters are standing for. It's invited in German language and so, but it's a tool, and you have to have a feeling of it's working like a browser. If you browse in the internet, you click to different numbers, to different headlines and so on, and you get drill downs in functionalities within this data. And you can define, for instance, a data on the consolidated level, on the unconsolidated level, and it's a collection of all the data a supervisor is allowed to analyze, to see, to get into the details. And therefore, it's easy handling for them. It's kind of dashboard. It's a collection of dashboards for different topics. And I think with these two tools, on the one hand, then the skilled user and then not so skilled user can use this data in behind. And coming back to your question, what we now have only in project style and a kind of POC at the moment, what we call this the EATE. It's in German the detection of atypical banks or atypical developments. There we have three pillars in this project. One pillar is to analyze with very advanced technology all the data we have, and not only the data we collect from banks, but also, for instance, payment system data or statistics data, and we try to detect atypical developments that needn't be necessarily a problem bank or a bank coming into problems, but it's a kind of atypical developments. And it's a hint, again, for supervisors to look a little bit more into the details. It could be a different operation model, a business model for a bank, but I think the supervisors have to get that information and have to see which banks are developing in an atypical way. That's one pillar. A second pillar is then really to use all this data we have and to calculate so-called probabilities of, we call it not default, but defined problem. And the defined problem, it's important for the supervisors to get a kind of early intervention, and not when a bank is defaulting, but an early intervention is when own funds are reduced, when there are some kind of mergers coming up and so on. So the second pillar is more a calculation with supervised learning techniques to get the information about the single bank. And the third pillar, we tried to make so-called social listening. So to screen all what you find in the internet for a bank, on Twitter, on different tools, to get information from the market, from the community, from social media, to get a hint about developments within what's going on in different banks, what's going on in the financial market. But that's in the beginning, I have to say. We have some first results, but you can imagine that the first two pillars are much more concrete and much more helpful for the supervisors. But the third one, but I think it's a pillar coming up in the future. The more in social media people talk about or write about banks and participants in the financial market, the more you can get valuable information of that.
Well, thanks, Johannes. That's very interesting. I'm quickly going to ask you, Carmen, about the same thing, like in the data analytics space. What projects are you pursuing?
Yeah, actually, very similar to what Johannes was saying. We actually have introduced this year, so far 5 months in, and I think it's working quite well, a model that we call hubs and spokes. So this is a model where the division I'm part of, RegTech Data and Innovation, is the hub, and then we distribute different projects and we elaborate different supervisory tools to the spokes. So this has a number of advantages. First, we work closely with supervisors. So we have a team of technologists, data scientists, programmers that actually work very closely with the supervisors to understand what they need. I think what we don't have is that consolidated layer that Johannes was referring to. So we get the data from different systems. So these are internal systems that they are very robust. They ingest data from different regulatory returns, and then they do some initial validation and calculation. So we access this data and prepare it different views from supervisors using things like Tableau, R, Shiny, Python. But I think the advantage of this model is, like, once we have developed it, the supervisory tool moves into the spoke, but that sits in different supervisory areas. So that helps with collaboration, but that helps developing people's skills, because it goes back, you know, if we look back in the Bank of England, Excel was the main tool for supervisors a few years back. And now in the last 5 to 6 years, we have seen an amazing digital transformation where people are embracing really new technologies. So this is the model we, as we say, we are developing now. We have 5 months in, and we have already put into production 3 new tools for supervisors. So we are quite excited about it, and we're seeing the benefits of it. Obviously, time will tell how we consolidate. Obviously, it's going to be a challenge when change is needed and start to happen. And we'll always back to the source of the data. Obviously, that needs to be tightly controlled. But I think for the time being, this approach of hubs and spokes to deploy solutions for the supervisors is working quite well for us. And then in terms of social monitoring, similar as well, we have what we call the PRA Twitter dashboard. And it was incredibly useful for us with the recent crisis of the Silicon Valley and Credit Suisse. Actually, the tool was very useful, but similar to what Johannes was saying, is in its infancy. We would really like to explore it, but access to social media data is getting a bit more challenging, I think, with the cost associated to it, of course. So, yeah, promising research in that space as well.
It's interesting. It's always difficult to get timely data, no matter where it's from, and social media is no exception. So Johannes, so let me ask you, like, what are if you had to name sort of 3 or 4 key benefits of doing this whole exercise of the data collection, the consistency, the consolidated way that you get data, and all the analytics on top? I mean, what are the key benefits of that in the end?
Yeah, the key benefits and the reason why we changed our system was first of all the quality and the inconsistency. And it was really terrible to see if you get it all on one table, these different fragmented data areas within the banks and within the central bank even, to solve this consistency topic. And as all the supervisors will say, garbage in, garbage out, the supervisory work and is so much based on high quality input data. And we also use this data not only for supervisors, but also for external statistics. And statistics on aggregated level we publish to the public. And it's kind of it's also basis of a rating of a country even. Yeah. And so these figures have to be of high quality. And I think that's the first and main advantage. And also an advantage for the banks, because whenever you have a problem with inconsistencies, you have a process of asking the bank. And then the bank has to find the inconsistencies. Now, if you have consistent data, there are no feedbacks, no feedback loops on questions. And so the process at all will be a much cheaper one. But to be honest, to implement such a system, it's very expensive. You have to do a lot of investments in that. And all stakeholders have to be willing and have to be ready to do that. And therefore, it was a strategic decision of the CEOs of the biggest banks in Austria to do that, because otherwise you won't be successful with such a project. So that was the first one. The second one is, I think it's a project fit for future, because if you now want to add some additional requirements, you have a lot of information already implemented in this basic cube. And therefore, you only have to make this add-on, only the delta to implement in the basic cube. And then for all banks, you have the same definitions. And we have in Austria one company and one software producing all these reports, these reporting requirements. So you have to imagine that this basic cube is the interface between all the banks and this company. And then the company only once for all banks, or most of the banks, produces the reports to the central bank. So all the changes, and that was meant with integration of processes, is a much cheaper one than if all 500 banks we have in Austria have to do it by themselves. And that's the second point. The third point is that I think we all learned a lot of each other, because it's a cooperation project. And I think the banks between each other learned, and we as statisticians, but also regulator, learned a lot of what's going on within the banks, and what can we do also to support them, not to help or to leave some things we want or we have to insist on. But if we have two possibilities, we can go that way. That's easier for the banks if it's the same result at the end of the day. And so this learning process is a question also of trust, and also, it's a cooperation and a collaboration topic. And I think at the cost, the quality, the way of cooperation, I think, and the higher granularity. It's a big advantage for the users to get in depth with our tools. If you get, for instance, the information, the loan growth, you can go now in depth because you have all the different loans, and you can see in which segment is it, in which currency is it, in which product it is, and so on. You have this possibility in very quick drill down possibilities in all the different fields of a balance sheet.
Yeah, That sounds like there are quite a few benefits, especially in Austria, to this data model. So I wonder if is the same thing true for you, Carmen, or do you have something you want to add on top of that?
Yeah, it's very similar. Obviously, we are not as far as developing the data model, but as I said, obviously we have this integrated approach to revisit what data do we collect and how do we collect it. So that will hopefully give us that integration of processes and consistency of data. And obviously the benefits and opportunities we see around this are huge. If not, we wouldn't be investing so much into this. I think that for us, and obviously because we're quite focused on the supervisory work, is we really believe it will drive a more effective supervision. And this is not about being quicker. This is about being better. I think our supervisors do an impressive and very robust job, but because of the data challenges we were talking before, it requires a huge amount of effort to obtain and consolidate all this huge amount of information. So I think it will really drive that consistency of data, a more efficient and effective supervision. And secondly, for us, it's also important that it's cost effective because we are aware of the economic climate, and organizations have a lot of challenges. So we believe that consistent data will drive a more cost-effective regulation and supervision approaches. But I think for us as well, thirdly, and what is more important, and Johannes touched briefly on this, but for us it's around trust as well. But trust in the data, and that is high quality data, because a lot of, as we were talking before, the data fragmentation and the challenges is because I really like how Johannes phrased this as a loop back around the data. So if the data is consistent and is trusted because it's of high quality, I think we will be in a really good space to be. So yeah, very similar benefits, although some slightly differences as well.
Differences based on the data model and the approach you're taking, yeah. So let's go down to some of the questions in the Q&A window, and I see we have quite a few people engaging. I think the first question that popped to mind for me was one on risk. So we talk about the benefits, we talk about the cost a little bit. This is of course a costly endeavor. Hopefully down the line for the banks, it will be cheaper to do this than do fragmented reporting in some sense. What about risks? Do you see that there are any risks associated with this enhanced reporting and data collection and analytics? We have one question: are there quicker risks to financial stability due to the quicker inflow of data? And I could perhaps add: are there any risks associated with a false sense of security, that you get the sense that now you've covered an area, this is not a risk based on the data that we have, but the data might be faulty? What do you see in that space of risks? Johannes, let's start.
Yeah. As always, if you have a project like a change management, in that sense, you always have risk. You have these project risks. You have to manage them really carefully, because what we didn't do was a big bang. So we always, when we changed in the direction of integrating one or more of these so-called templates in this cube system, then we did a kind of parallel run for a minimum of 1 year. So I know that's the double workload for all of us, but we had the possibility with this parallel run to see whether the old world and the new world, where the differences, and are there now the differences based on errors the banks did in the old world, or is it an error or a mistake we did in the new world? So that had to be really carefully analyzed during this parallel run. If you make a big bank, you always have problems then not to know where really where's the truth then. And in addition to that, you have to take care on the investment cycles in the IT of the banks. And we keep it up to the bank within several time slots to change, because some of them implemented 2 years ago in a new system, hardware, software, and so. And we have been very flexible then within the transition period, not to produce again sunk costs for all different stakeholders. But one risk I want to point out very much is, if you define a data model everyone is using, and all the banks in Austria use the same data model. And if there's an error in it, if there's a mistake, a wrong definition, then all of the banks will make the same error and you will get the same wrong result. And therefore, you have to be really careful in implementing, in defining them. You need more than 4 eyes principles and so on. We have this parallel quality check in defining our data model, not only within the different banks, also in the central banks, the software providers, and so on. You have to be really careful if you change something in your data model, because otherwise everything is wrong. Yeah? But on the other hand, you are if you find then the error and the mistake, you are very quick in correcting it, because you have to correct it only once, and then everything is correct again. So you have no advantage without disadvantages, and vice versa. So that's maybe a statement to the risks.
Well, thank you, Johannes. Carmen, I'll just give you a quick chance to comment on the risks as well, if you have anything you want to add.
No, I think I completely agree with Johannes what says, and you made a point. I think there is it's a really good question, because there is this sense of now we have all the data we need, how we want it and when we want it. Is that a false sense of security? I truly believe not, because I think it's going to take a long time. I think for automating decision making, that is what we're not looking for here. Actually, I think at the center of all the tools, of all the data we prepare, is always the supervisor. And we have a human, very highly professional person here that has lived through a number of crises, and they know what they need to look for in the information. So it's not like, I understand that risk if we were with an end-to-end automated supervision approach, where you have all the data, you have your alerts, this is a decision. But I think, the impossibility of an end-to-end automation will probably minimize the risk. I think Johannes touched here, and I think probably for us the risk is the speed of the technology more than anything, and how we can cope with it, and the cost of it, obviously associated. Being public sector, we're always slightly behind in that sense, as much as we try to catch up. So I think the risk will be for us associated with that, how we can make sure our infrastructure is solid and in place, so we can take advantages of this huge amount of information. But yeah, as we go through a change management, as Johannes was saying, new risks can emerge. But at this point, I think these two will be the biggest ones.
Oh, thanks both. That's very clear. So let me put another question to you, Carmen, which is a bit more technical. So for this big data analysis, which of course is associated with RegTech and Suptech, do you use any specific system, such as like the common systems out there, Hadoop with R or Python?
Yeah, it's a really good question, and I wish I have like 3 hours here, because it's a very interesting topic. We introduced in the bank back, I think it was 2017, what we call the data analytics platform, and that was an on-premise solution based on Hadoop. Actually, the main objective of this data analytics platform is to consolidate data and enable self-service to different data personas, supervisors, statisticians, researchers. So the idea is like, we're going to put the data more in a data lake kind of approach, and enable access to people with the right skills so they can consume the data more self-sufficiently. This actually was a really good stepping stone to understand how a future data lake or self-service approach can look better for the bank. And this is basically when I think we started introducing R and Python in the bank. So but we don't use it all together. So we have the data analytics platform that is based on Hadoop, and then a number of people across the bank, a really large number of people, use R and Python on their day-to-day activities. So it's not like R and Python can only be used within this platform, but obviously that was, I think, the first initial step to introduce these new technologies in the bank. And it has come a long way. But it's usually mainly for research at this point.
Johannes, is that the same thing at the Austrian Central Bank? Is it also integrated with R and Python and other sort of modern tools of data analysis?
Yeah, so R and Python are the most common tools we use, but what we not have at the moment is an analytical platform. But I hope the decision will be done from our board already now in the next weeks, because we are all waiting for a data lake and an analytical platform, because we want to open our system more to a more self-service for the users, and there's a big point. I think it's in all central bank, and Carmen mentioned a very perfect quote: "Not to being bigger but better." Yeah, and many thanks for that quote, because normally resources are always put to supervisors and not to the statistics. So many people, the head count is growing in supervisory areas, and in statistics it's the minimum stable, and therefore we have to support them and to help them. And the more people are working in supervision, the more problems we have in statistics, and therefore we want to skip more to a kind of self-service, and therefore we need this analytical platform. And yeah, there are a lot of skilled peoples, and even they want to work in a kind of self-service way, and the skills changed so much during the last years in that area, and therefore again this analytical platform we need, but it's a lot of money, and we will probably go to a kind of Cloudera, because we have to have the focus in the European system of central banks. And when there is an architecture, a technology in the ECB where we have to think about interfaces and so on, maybe it will go in that direction, but that's a decision of the IT department in our case.
No, thanks, Johannes. It's always frustrating when resources not go exactly where you want them to go, necessarily from the point of view of a statistician. So I have a few more questions. I actually have a question myself I'd just like to ask. So when you've implemented these data models, how have you sort of made sure that the small banks are also on board? Because I imagine that many of these outreach activities have involved the larger banks. So I was wondering, maybe you can answer first, Carmen. How have you made sure that the small banks are being heard and that they're also capable, given their limited resources, to implement these models?
Yeah, it's a really good question, and obviously a question we have been battling, of course. In the UK, what we have is a segmentation categories where the different size banks belong. So we have category 1, category 3, category 3 and 4. And obviously the requirements in terms of the data they provide, it depends on the category they are at. However, crises like the Silicon Bank, for example, where it's not major bank in the UK, but however can have a major impact, have actually revisited that question of, are we oversimplifying the impact that these small, medium organizations can have? And equally similar to non-financial banks as well, we have a lot of non-financial institutions that can have potentially a big risk for financial stability. So these are the questions we're actually trying to answer as well. Initially, as we say, we try to adapt the regulatory regime to the size, just to make sure we're not over asking for the small and medium banks, but equally it's important that we obtain the information we need. So some balancing acts there.
Yeah, that makes sense. Johannes, do you want to answer that question as well?
Yeah, it's really a good question, but you have to separate the kind of small banks. We have a lot of small banks in Austria, part of so-called the rural sector, for example, or the saving bank sector. We have 50 small saving banks, or more than 200 or 300 rural banks, very small entities, but they are organized within a sector. And as they have a sector IT department, it was the same for them to be onboarded in the centralized, in the integrated system, like to be a big bank. So that was not the problem. The problem were really the standalone small banks, and especially those having an IT support, the IT solution, where their banking, their core banking system integrates, or where they have already an integrated system, core banking, including the reporting. And therefore, them, it didn't make sense only to extract the reporting to a centralized company or to bring it to an integrated data model. So we have in Austria a coverage of 95% with our centralized company, reporting company, but the data model, that is implemented by 100%, because the software provider for the smaller banks implemented it also, the basic cube, as an interface from the core banking system to their system, and then from their system, it could be used for the smaller banks for the reporting channel to the central bank. So you have a little bit to differentiate between the different small banks, but all in all, at the end of the day, for the integration of the content of the integrated data model, it was not a problem at all.
Well, that's good to know. Or I'm happy to know that. So we have just a few minutes left. I'm just going to ask, let me ask you, Carmen. So have you given any thought to using open data sources? So essentially public data sources in RegTech and Suptech? Or are you sort of relying more exclusively on the regulatory reporting data?
No, I mean, it's a really good question, but we use different kind of data sources. Obviously, we use the regulatory data for the supervisory and regulatory activities, but we have different areas of the bank, and even within supervision, that sometimes we access publicly available data if it meets our needs. So there is no, well, actually, one of our examples was our Twitter dashboard was using the free Twitter API that's not free anymore, but until it was free, we were using it. So obviously we make the most of the data that is available to us, but obviously when it comes to our supervisory activities, there is a strong reliance of the data we collect from firms, mainly. But yeah, we're not limited to not use data that is publicly available.
And Johannes, same question to you.
Yeah, it's more or less the same what Carmen mentioned. It's always a problem for supervisors to use data you can't rely per 100%. So I mentioned that this pillar in this new project we have, where we tried by social listening to get some additional information, but it's a small add-on. That's the maximum. Supervisors always want to have their forms signed by the CEO of a bank. So there needs to be a big cultural change, I think, before supervisors can rely on such data, on open data. And it's not easier for them because they have to go maybe to court to argue with lawyers and so on. You have to have really reliable data, and you have to know what kind of data you have, and it must be always the same. But what we use when we take some kind of web scraping algorithm, we use it for external statistics. When we collect, for instance, from the IMF webpage, exchange rates or so, or if we try from big companies for their homepage, we try to collect some secure information about bonds and so on. But that's always a little bit problematic because you can't by 100% rely on private data, on public data. They can change so much their homepage and so on. You have to have your standard processes at all, and all the other possibilities or data sources are nice to have, but it's always a maximum add-on, but not for a change of your ITS standards from the EBA or anything else. Yeah.
No, thanks, Johannes. That's very clear. We're getting close to the end of this session, so I think I will close the Q&A for now, and I will thank you both very much for attending or speaking at today's session. If the audience would like to get in touch with the speakers, Johannes and Carmen, you can find them on LinkedIn. You're also welcome to get in touch with me on LinkedIn. And yes, again, I would just like to thank you very much for the useful information, and hope to see you again sometime. Thank you.
Okay. Thank you, Thomas. Thank you, Carmen.
Thank you, Johannes.
Thank you.